Hi guys, a very good evening to all of you and I welcome all of you to my YouTube channel that is Rahul Shikha Academy. So we are carrying our Manzil batch. We are doing a Manzil batch for all the three subjects in which today is the session number 4 of the subject Advanced Account. If you have reached this video, first of all, please press the like button, and if you have not subscribed the channel, please press the subscribe button and the bell icon as well. So as you know, this Manzil batch is being taken by me free of cost totally for all the students across the country for all the three subjects, that is advanced account costing and FMSM, and it is purely MCQ focused batch where we see the various MCQs and we do the brainstorming to solve and to find out the correct answer out of the various 4 options which are given, and we try to cover the theoretical aspect, practical aspect, and even the case studies. So let's move ahead without wasting any further time to the main screen. Come on guys. So advanced account session number 4 today. We will first of all do the marking advanced account session number 4 and let us see what is going to be the content of the today's lecture. Okay guys, so we will be doing one chapter, that is amalgamation, and along with that we will be covering some of the AS. So we have been following this approach from the session number 1, that we take up few chapters if they are small, more than one chapter, and along with that few AS. So we have been doing this in all the sessions. So in the next session, when we meet in the session number 5, we will be taking up the chapter of consolidated financial statement and some of the AS. In the last session, session number 6, there are total 6 sessions of advanced account. In the last session, session number 6, we shall be taking the remaining AS. Okay guys, so let us start G, and all the students who are with me in this session. So we will first see the question and then you will also think the answer in your mind, and before I mark the correct answer, you have to guess that, and you can write that in the comments as well, live chat as well. So chapter amalgamation we will be dealing, and the AS number 9, 10, 11, 12, 14 and 15. Sir, what about AS number 13, sir? Why you are not discussing that? Because when we did the chapter investment, accounting for investment, I took up AS 13 there itself. Okay, and AS 14 is nothing but amalgamation itself. So the questions of amalgamation as well as the AS 14 shall be taken up. Okay ji. So we start with the question number 1 guys. I hope all of you are ready. Come on. So question number 1, very nice question relating to the chapter amalgamation. It says that A limited decides to absorb B limited. A limited decides to absorb B limited. So this is the case of absorption where B limited will vanish and A limited will continue. The draft balance sheet of B limited is given to us. There are certain liabilities in which there is a share capital, preference as well as equity, certain reserves, debt and trade payable. In the asset side only the sundry assets are given. Let us see what does the question want. It says A limited has agreed, the purchasing company has agreed, number 1, to pay rupee 20 per share in cash to the equity holders of B Limited. So A Limited says that boss, if you are an equity holder in B Limited, how many equity shares are there? 12,500. So A Limited is saying that we will pay rupee 20 per share in cash to the equity holder of B Limited. We know anything which is given by the purchasing company to the shareholders of the vendor company, that becomes the purchase consideration. So this is a part of PC, and simultaneously they say that we will issue 6 equity shares of rupee 100 each. We will issue 6 equity shares of rupee 100 each, but the market value being rupee 125 means the face value is 100, but we will be issuing them at 125 in lieu of every 5 shares held in B Limited. So for every 5 share we are going to issue them 6. If I do the rough calculation over here, rupee 20 per share in cash, so there are 12,500 shares. So 12,500 multiplied by 20 child, it gives me 2,50,000 rupee, and along with that it says we will issue 6 equity share of rupee 100 each in lieu of every 5 held. So 12,500 are your share, we are going to give you 6 each for every 5 held, 6 for every 5 held, and the rate is rupee 125. So 12,500 into 6 by 5 into 125, this gives me 18,75,000 rupee. If I club these two, the total comes out to 21,25,000 rupees. So this is the PC for the equity shareholder. Reading the point number 2, to issue, the A Limited has agreed to issue 9% preference share of 100 each in the ratio of 3 shares of A. So we will give 3 shares of A for 4 preference share in B. So if you are holding 4 preference share in B Limited, we will give you 3 new shares. Okay, so how many are these shares? Let us see. These are child 5,000 preference shares. So we are saying 5,000 shares, we will give you 3 shares for every 4 held, and the amount is rupee, face value is rupee 100 itself. So 5,000 into 3 by 4 into 100, it comes out to child 3,75,000 rupee. Then question says to issue 8% debenture at 96 in lieu of 6% debenture. So debentures are being given to the debenture holders of B Limited. We know that this is not the part of PC. Anyhow, so let us see what does it say. From the above details, it says answer question number 1 to 2. So there are 2 questions based on this case scenario. Question number 1, what is the amount of PC, purchase consideration, for equity shareholders? So when we were discussing all this, we found out this value as 21,25,000 rupee. That boss, this is the amount of PC for the equity shareholder. So the option which is having 21,25,000 rupee, that is option C, is the correct answer. Question number 2, it says what is the amount of PC for the preference shareholders? So we have solved this as well, that the amount of PC for preference holders is 3,75,000. So the relevant option shall be correct one, that is this one, 3,75,000 rupee. Obviously I have solved it over here in rough, and in the exam as well you will have to solve it in rough, because this is an MCQ. The examiner over there is not going to check in detail that what are the steps you have applied. Still, for the sake of understanding, I have given the answer. As I say in every session, we cover almost 20 questions, and after the 20 questions, whatsoever case studies etc. are given, or some practical questions are given, so I give the detailed solution after that. So you can see this is the solution for question number 1 and 2. So I have shown in detail over here the purchase consideration thing, so you can refer this. Moving further, child. Moving further to question number 3, again from the amalgamation chapter and the AS number 14. Amalgamation adjustment reserve is presented in the financial statements of the transferee company as. So amalgamation adjustment reserve is created when there are the statutory reserve and the amalgamation is in the nature of purchase. So that account which you create to note down the statutory reserve, that is the amalgamation adjustment reserve, where is it shown by the transferee, that is the purchasing company. So it is giving various options, and other current asset, or separate line item with a negative sign under the head reserve surplus, or other non-current asset or investment. So what's the correct answer? The option B is the correct answer, separate line item, puttar. It is the separate line item with a negative sign under the head reserve and surplus. Everyone should know that, because when you do the chapter questions of the chapter amalgamation, in that sometimes the question asks for the balance sheet of the purchasing company as well. At that time, we know that under the reserve and surplus, we note down the statutory reserve, and there itself we put the amalgamation adjustment reserve as a negative. Okay ji, come on ji. So we are coming to next question, that is question number 4, child. It says liabilities of vendor company, okay, which are not assumed by the purchasing company. Not assumed means the purchasing company is not taking over. Usually in the case of amalgamation, we say that purchasing company usually takes over all the assets and the liabilities, but over here they are saying, for example, there were 10 liabilities, out of that only 6 have been taken over by purchasing company, so 4 have been left. So what to do with them? So those liabilities have to be, various options being, either realized, assets are realized, paid off, yes, this is the correct answer. The liabilities which have not been taken by the purchasing company, obviously you need to pay it off. They're saying written off, no, you can't write it off, the liability will not leave you, and any other, no. So the correct answer is paid off. So any liability which has not been taken over by the purchasing company obviously has to be paid by the vendor company, puttar. Coming to the next one, that is question number 5. It says, in case of interest, revenue is recognized on. Now this belongs to AS number 9, revenue recognition. That AS gives us the broad principles of, with respect to as to when to record the revenue, means the timing of recording the revenue. So there are specific cases like interest, royalty, dividend, etc. So the question relates to interest. It says in case of interest, revenue is recognized on, various options being given, either cash basis or accrual or time proportion. What's the correct answer? Usually students get confused between the time proportion and the accrual basis, but the correct answer is time proportion basis. Time proportion basis. Like you can say, for example, when you do the chapter investment account, in that chapter, when you maintain your buy balance carried on, for example, your accounting year is till 31st of December, means you are closing your books on 31st of December, but the company pays you interest on, for example, let's say puttar 30th September and the 31st March. Now you are closing the books on 31 December. The last interest was paid on 30th of September. So as per the time proportion basis, the interest you have already earned for the month of October, November and December. So interest is always recorded on the time proportion basis. Okay, wonderful question coming. Very, very good question relating to AS number 10. It says a plot of land with a carrying amount of rupee 1 lakh, means carrying amount means book value was 1 lakh rupee. It was revalued to rupee 90,000 at the end of year 2. So there was a book value of 1 lakh, but you revalued it to 90,000 rupee, means you have marked a loss of rupee, means downward 10,000 rupee. As per AS number 10, whenever there is a downward shift in the value of the asset, it has to be debited to the P&L account. Then it says, subsequently, due to increase in market values, the land was determined to have a fair value of rupee 1,05,000 at the end of year 4. So you have increased the value from 90,000 because you valued it at 90,000 at the end of year 2. At the end of year 4, you are valuing it at 1,05,000, means you are increasing it by 15,000. In the normal cases, whenever there is an increase in the value of the asset, PPE, so you take it to the credit side of revaluation surplus. But this is a specific case where you had earlier taken the downward shift in the value and now you are taking it upwards. So AS number 10 very clearly says that whatever amount you are increasing, to the extent of earlier reduction, you had debited your P&L, so credit your P&L by that amount, means nullify the effect in the P&L. You debited earlier, now credit that amount. Whatever is left, how much is left? Out of 15,000, I had, if I take 10,000 rupee to the credit side of P&L, the rest 5,000 rupee shall be taken in the revaluation surplus on the credit side. So this is going to be the correct treatment. Question asks us, assuming that the entity adopts the revaluation model, what would be the accounting treatment of this particular scenario? Okay, so various options are given. First one says initial downward valuation of 10,000 debited to revaluation reserve. So this is wrong. We need not study further because it is saying this 10,000 was to be debited to the revaluation. No, this is wrong. Then says initial downward valuation to be debited to P&L. Yeah, it's okay till here. Subsequent upward revaluation of 15,000 credited to P&L. No, you are also wrong. Third case, third option, initial downward valuation of 10,000 debited to P&L, correct. Subsequent upward revaluation of 10,000 credited to P&L, okay, correct. And 5,000 credited to revaluation reserve, again correct. So this is the correct option. I will mark it so that at the time of your exam it may become handy for you. Okay, let us read it last option as well. So it says initial downward credited to P&L. Arey bhai, no, it is wrong. It is not credited but to be debited to P&L, guys. Okay, coming to next question, question number 7. It says following is not added in the cost of PPE. So 4 options are given. Out of these 4, 3 items are those which are added. So we have to find out the odd one which is not added. First says cost of site preparation. So it is added. Installation and assembly cost definitely added. Professional fees definitely it is added. So left or option is 3. So obviously this is going to be the answer. Or we will read it also, cost of relocating or reorganizing part or all of the operations of enterprise. Yes. So AS10 specifically says if you are just relocating your or reorganizing the operations of enterprise, so whatever the cost is being incurred in that, that is not to be capitalized under the PPE at all. So option C is the correct answer. Question number 8, guys. A machinery was purchased having an invoice price of rupee 1,18,000, but it included the GST of 18,000 and the GST amount is available as ITC. Now we know that in indirect taxes, this is the basic thing you study, that GST is the amount which is levied in the invoice by the supplier. Now, as far as the purchaser is concerned, if you get the ITC of that particular GST amount, it doesn't become the part of cost. But if you don't get the ITC, it will become the part of cost. So in this case, it is said that you have incurred rupee 1,18,000, including 18,000 GST. Means I can say that taxable amount is 1 lakh and the amount of GST is 18,000. But the question says, boss, the ITC is available. If ITC is available, this will not become the part of cost. So this is the only relevant cost. This is the only relevant cost, 1 lakh. Question says the rate of depreciation is 10% on SLM. and it says what would be the depreciation for the year 2002-3. So the students who don't know the concept of GST, they will simply say 1,18,000, 10% of this is 11,800. So this is the correct option, but no, we have to first of all find the cost which is coming out to rupee 1 lakh. So we will say 10% of this rupee 1 lakh, and the correct depreciation shall be rupee 10,000 child. Accordingly, the correct answer is this A option, rupee 10,000. Moving further to question number 9, child. Be with me. These are very, very good questions. Question number 9. Entity B constructs a machine for its own use. Okay. Construction got completed on 1st of November, but the company does not begin using the machine until 1st of March. Very much possible. It may be possible. Now, for example, if I take the case of a household, so you have bought a land at particular place, you made a beautiful house, but you said no, we will wait for another 2 months, and after 2 months we will shift to that house. So same case is over here. The company was preparing a machine, was manufacturing or constructing a machine which got ready on 1st of November, but they said we will start using it after 3 months, 4 months, November, December, Jan and Feb. 1st March say you will start using it. So the question is, when should they start charging the depreciation? Okay, so there are two dates. There are two dates which are relevant over here. One is the 1st of November and the other is 1st of March. And there are some different type of students. They say, sir, year end is also on 31st March. So there should be third date. So for such students, this third date is also given over here. Okay, so what should be the correct answer? The law says, AS10 says, when the construction of the asset is complete and it is ready to be used, you should start charging the depreciation. The fact that you have not started using it does not matter at all. We have to see whether the asset is ready to use or not. If yes, you have to start charging the depreciation. So in this case, asset was ready to be used on 1st of November itself. So you should start charging the depreciation on 1st of November itself. That's the correct answer. Next question coming from AS number 11. The debit or credit balance of foreign currency monetary item translation difference account. So this is the specific account which arises in some situations in the case of AS number 11. The question is, where is it to be shown? So it is giving the various options like miscellaneous expenditure or reserve and surplus, other non-current or current assets. So it is shown under the head reserves and surplus. This is the correct answer, and this has been specifically said by AS number 11. Okay, now comes one case scenario. On the base of that, we will have to answer certain questions. Let us see. So it says Kaleem Limited has borrowed 4,50,000 US dollar on 1st of January 2001, which will be repaid on 31st of July. So they have done the borrowing in US dollar from the other country. Obviously, if you go to any bank in India, they will not give you the loan in dollar but in rupee. So we have got the loan in dollar. It means we have taken it from another country, right? When we study the financial management, this is called as the ECB, external commercial borrowings. Okay, Kaleem Limited prepares the financial statements ending on 31st of March 2001. So you got the borrowings on 1st of January. After that, there is year end 31st March closing date, and you have to make the payment on 31st of July. The rate of exchange between the reporting currency, means the Indian currency INR, and the foreign currency, that is US dollar, on the different dates is as under. So when you took the loan on 1st of January, the rate is 48. On 31st of March, the rate of $1 has gone to 49 rupee, and on 31st July, the rate of dollar has increased to 49.5. So on the base of this data, you are required to answer number question 11 to 13. Let us see. So question number 11, first of all, at what price the liability should be recorded on 1st of January? So the principles of AS number 11 clearly say that the transaction is to be recorded at the spot rate. Means you have taken the loan, it's a liability, obviously. It is to be recorded at the spot rate. The spot rate means the rate which is existing on the date of the transaction itself. The transaction happened on 1st of January. The rate was rupee 48 per dollar, and you have taken the loan of $4,50,000. So you will do 4,50,000 multiply by 48. So the correct answer, the value is coming as 216 lakh rupee. So this becomes the correct answer, 216 lakh rupee. Okay. Next, it says, what is the exchange difference on 31st of March 2001, child? Okay. Haji, what do you think? What shall be the exchange difference? You can write down in comment. What is the exchange difference on 31st of March? If you see, the rate has increased from 48 to 49. Simply see, the rate has increased by rupee 1. Means $4,50,000 into 1. So 4,50,000 rupee is the exchange difference. So 4,50,000, but as soon as you go to the options, it is saying 4.5 lakh, 4.5 lakh. So there are two options given with the same amount, because it can be either the loss or the gain. Now you have to tell me whether it's a loss or the gain. Haji, you have to tell me whether it's the loss or the gain. It's a nature of liability. We have taken the loan. The loan is a liability. So from 48, the amount has risen to 49 per dollar. Means 1 rupee per dollar. So I had to pay $4.5 lakh, and if the rate increases by rupee 1, it means I have to pay 4.5 lakh more. So that's a loss for me. So the correct answer is option A, child, loss of 4.5 lakh rupee. Okay जी, हमारे मोर तक थैया थैया come on जी. हाँ जी, क्वेश्चन कहता अगे, what is the exchange difference on 31st of July? Because now by taking this rupee 1 into consideration, you have considered 48 plus 1, that means 49 rupee. The liability has reached 49 rupee on 31st of March. But when the date of 31st of July came, the rate has increased to 49.5. It means again, when you had to make the payment, the rate again increased by 0.5 rupee per US dollar. So 4.5 lakh rupee dollar multiply by 0.5, so you get 2,25,000 rupees. So you have to pay this more. Again, there is a loss, and amount is 2,25,000 rupee. So the correct answer is loss of 2.25 lakh rupee. So this is the exchange difference on 31st of July, child. हाँ जी, I hope we are comfortable till here. So these are the questions of AS number 11, and again, as I always say, that for this case study or practical questions type, I give the detailed answer as well. So if you want to see the answer along with the journal entries, that is also given below. So you can see this as well for your understanding, more understanding, I should say. Haji, coming to the next question number 14, relating to AS number 12, child. It says, to encourage the industrial promotion, IDCI offers subsidy worth Rs 50 lakh to all new industries set up in the specified industrial area. So there are certain areas which are designated as the industrial area. It might be in your city as well. For example, I belong to Chandigarh. There is Chandigarh industrial area. Currently I have been living in Pune for few years. So there is an area called Chakan or MIDC, etc. That's purely an industrial area where the industries are set up. So to promote certain type of region, the government may say that you come and please have your industry over here, I will give you incentive. In this case, the subsidy of rupee 50 lakh is being given. It says this grant is in the nature of promoter's contribution. Obviously, we know that the question need not tell us this thing. So it says how much subsidy should be accounted in the books. How such subsidy should be accounted in books means it wants to ask the accounting treatment. Okay, so what's the accounting treatment specifically given in AS number 12, that the such grants which are in the nature of promoter's contribution have to be taken to the capital reserve. So first option is credited to capital reserve, and yes, this is the correct option. We shall though read the other options as well which are given, so that you may be clear. Okay, the other option says credited as other income in P&L, no, not allowed. It says both A and B are permitted, no, B is not permitted. Credited to general reserve, no, it's a very specific type of thing, so you have to take it to the capital reserve. You can't take it to the general reserve, because if you take it to the general reserve, it will become the free reserve, and the company will be able to use it for the payment of dividend, whereas that is not the purpose. You have to take it to the capital reserve. It is treated as the capital profits, child. Good evening, good evening, good evening, good evening. Guys, children are saying in the comment section, good evening, good evening, good evening, good evening. One child is saying, sir, I purchased advanced account lecture, got exemption in accounts. Thank you, thank you. The name of the child is GTA 5. Obviously, it's not the name of the child, but of his YouTube channel. You are welcome, Puttar. Sir, good evening, good evening. Sir, पहले 3 सेशंस की लिंक मिल सकती है? Yes, of course, it is on my YouTube channel as well, but yes, I will put all the links in my Telegram channel as well after this session, and the file, the PDF notes which I am using over here shall also be put in the Telegram channel. So if you are not joined the Telegram channel, please join, child. Haji, let's move ahead. X Limited has received a grant of rupee 20 crore for the purchase of a qualified machine costing rupee 80 crore. So the machine's cost was 80 crore, you got a grant of rupee 20 crore. So in effect I can say 60 crore from your pocket. X Limited has a policy to recognize the grant as the deferred income. Okay, so there are two ways to record the grant as per AS number 12. So this method says that they treat the grant as a deferred income, means they are not doing this 80 crore minus 20 crore is equal to 60 crore. This is called the deductive method. They are not doing this. They are saying 80 crore is the asset separately and 20 crore is our deferred income separately. Okay, fair enough. The expected remaining useful life of the machine is 10 years, assuming that there is no salvage value and the depreciation method is straight line. Amount of other income to be recognized in the P&L statement will be. So the method, specifically the thing which the question is saying, the company has a policy to recognize the grant as deferred income. It simply means that when the company will depreciate the asset, it will not depreciate 60 crore. It will depreciate whole 80 crore and it will take the relevant portion of the 20 crore rupee separately in the P&L account on a systematic basis over the useful life. The question is saying the useful life is 10 years. Means when you will charge the depreciation, you will say 80 crore divided by 10. So 8 crore is the depreciation and 20 crore divided by 10. 2 crore rupees shall be taken to the credit side of P&L. So ultimately the effect will be 6 crore only. 8 crore depreciation debit and 2 crore on the credit side. 6 crore net will be debit, which could have been in this scenario. But treatment depends on organization to organization. The question which is being asked, what is the amount of other income to be taken to the P&L? Means this 2 crore the question is asking. So the correct answer is option C, 2 crore rupee, child. Okay, should be comfortable. Okay, wonderful question coming up. Very good question. Such type of question has been asked in examination countless times for 5 marks. So we are doing this. Ram Limited purchased a machinery child for rupee 80 lakh. The life useful is 4 years and the residual value being 8 lakh rupee. It says government grant received against this machinery is rupee 32 lakh and the grant is credited to fixed asset account. Grant is credited to fixed asset means they follow the deductive approach, means 80 minus 32. So net is 48 lakh rupee only. This is called as this is the meaning of this lines, that grant is credited to fixed asset. Okay, it says the grant was to be refunded after the second year, means there were certain conditions prescribed which were to be followed if you had to keep the grant, but you failed to meet those conditions and the government took the amount of grant back. You had to refund that. Okay, so question says from these details you have to answer question number 16 to 19. So 16, 17, 18 and 19. First of all, question 16. It says, child, what is the depreciation charged per annum for year number 1 and year number 2 for first and second year? But be very specific, be very clear. Question is saying per annum, charged per annum. Sometimes the student will not say this and they will say first year, second year, they will club and mark the answer which is the total of these two. So that will be absolutely wrong. Please read the question very carefully. What is the depreciation charge per annum for first and second year? Obviously, it will remain for first and second year because we will take the straight line method into consideration and because the grant was refunded after second year. So whatever the changes shall be in the third and the fourth year. For first and second year, the things will remain simple. Okay. If we have to find it out, we will say you bought the machine for 80 lakh. Out of that, 32 lakh was the amount of grant. So you recorded the asset at 48 lakh. Now if I want to charge the depreciation 48 lakh minus the residual value which question says is 8 lakh rupee. So this becomes my depreciable amount which is 40 lakh and the life is, child, question says 4 years. 4 years. So 40 lakh divided by 4, the amount of depreciation comes out to 10 lakh rupee per annum. So 10 lakh rupee per annum, this is the correct answer. Now the students who will ignore this wording per annum, they will say 10 lakh. So for first year 10 lakh, for second year 10 lakh means total 20 lakh and they will mark this option as correct, option C, but it is wrong. Okay. Okay, moving further. It says what is the book value of machinery after 2 years? So you recorded the asset at, child, 48 lakh rupee. You recorded the asset at 48 lakh. In the first year, depreciation of 10 lakh was charged for year 1. In year 2, again the depreciation of 10 lakh was charged. So the net amount which remains is 28 lakh rupees. So this is the book value after 2 years, means before the refund of grant. So option C, where we see the amount of 28 lakh rupee, this is your correct answer, child. Okay. Now it says, what is the revised book value of machinery after the refund of grant? Okay, so this, I said that this is the book value of machine at year 2 end, but it was before the refund of grant, before refund. Now question is asking revised book value after the refund of grant. Okay, so my value was 28 lakh before the refund of grant. When you got the grant, you deducted this grant amount 32 lakh. So now when you have to return it back to the government, what you will do? You will add it back. So 28 lakh plus 32 lakh, it becomes 60 lakh. So 60 lakh means option A is my correct answer. This is the revised book value of machinery after the refund of grant, child. Okay. Now the next question which is being asked, what is the depreciation charged per annum for the third and fourth year? Again, per annum. Okay, per annum. So now the revised book value you have got is 60 lakh rupee. So this is my revised book value. Out of that, I will deduct the residual value, which was rupee 8 lakh. This is the value, and divide by the balance life. So out of 4 years, 2 years have already lapsed, and the balance 2 years are left. So 60 lakh minus 8 lakh divided by 2. So it becomes 52 lakh divided by 2. That comes out to 26 lakh rupee per annum. So option B, 26 lakh rupee is the correct answer. And if you want to see every step in detail, so I have done it over here, right? So this is the depreciation per annum for each year. I have marked it over here. This is the book value after 2 years. Revised book value is 60 lakh and revised depreciation is 26 lakh rupee, which we just found out. Okay. Okay, so we are done with 19 questions. The last question, which is from AS number 15 over here. So it says actuarial gains or losses should be. So in AS number 15, which talks about the retirement benefit, we talk about Mr. Actuary as well, who is a specialized person who helps the organization in fixing the correct amount of liability, to make the correct amount of provision, to have the correct amount of estimation to the nearest correct figure basically. So sometimes as per his valuation, certain gains and losses may arise. Now what is the treatment of that? That is given in AS number 15. So it says actuarial gains or losses should be, options are recognized through reserve, wrong option. Should be charged over the expected life of employee, wrong option. Should be charged immediately to the P&L statement, yes, this is the correct answer. AS number 15 specifically says that whatever the amount of actuarial gain or loss be, that should be immediately taken to the P&L. So that's the correct answer. So this is it in the today's session of advanced account. I hope all of you have enjoyed. हाँ जी, इस ਦੇ ਨਾਲ ਸਾਡਾ ਅੱਜ ਦਾ ਸੈਸ਼ਨ ਖਤਮ ਹੋਇਆ and it was very knowledgeable and enriching as usual. ठीक है ना? So there are total 6 sessions of advanced account, 4 are done, 2 are left. Similarly in FM/SM there are total 5 sessions, we are done with 3, 2 are left, and in costing there are 4 sessions, 2 are done, 2 are left. So out of 15 sessions, we have total 15 session of advanced plus cost plus FM SM, 6 are left, 9 are done. 6 sessions are left, 2 of each subject. So we will keep meeting daily at usually this time only, and I put the notification in the Telegram channel. So you please stay connected on the Telegram channel for all these updates and for the other things. A lot of interesting things are coming up in the next days for all of you. With this, I take the leave, guys. Good night and all the best. Bye-bye.